you know there's a battle for your money happening right now, in 2026. And it's not being fought on some far-off battlefield. Nope. It's happening in the halls of Washington, and on the computer servers that basically run the global economy. It's this incredible clash between the old guard of finance and a brand new, disruptive force. And in this explainer, we're going to break down this high-stakes conflict and, what it actually means for the future of your savings.
So yeah, a quiet but really intense war is being waged for your savings. And the fighters in this match are two totally different philosophies. On one side, you've got the banking system we've all known our entire lives. And on the other, the wild, disruptive world of cryptocurrency. So let's get into what's actually at stake here. All right, so to really get our heads around this thing, we're going to look at 5 key areas. First, this massive tectonic shift that's shaking up finance. Then the great yield divide that's really feeling the fire. After that, how the battle is moving to Washington, the trillions, yes, trillions of dollars at stake, and finally, what this all means for the future of money itself. Okay, let's start with the big picture. We are living through one of the most pivotal moments in financial history. I mean, the stage is literally being set for a fundamental, structural clash in the entire world of money. And right at the heart of this massive shift is this deep, growing conflict between two really powerful and competing systems for handling your cash: traditional banking and the crypto industry. And look, this isn't just some small disagreement. This is a fight over who gets to control the flow of capital, period. So on one side, you have traditional banking, right? The system we've all used forever, which really runs on your deposits. Then, on the other side, you've got the crypto industry. It's this disruptive new force, led by big platforms like Coinbase, and powered by these super innovative products called Stablecoins, which you can just think of them as digital dollars that work on the blockchain. So what is actually fueling this whole thing? Well, it's something we're calling the Great Yield Divide. And this is the economic engine driving this entire battle. It all boils down to a huge, huge difference in the returns you can get on your money. This slide, man, it just perfectly lays out the two competing models. For decades, banks have taken your deposits, paid you next to nothing for them, and then loaned that money out at a much higher rate. That's how they make their profit. But stablecoin platforms, they're totally rewriting the playbook. They can generate much higher returns on your digital dollars, and here's the kicker, they pass a big chunk of that back to you.
And the difference is, well, it's staggering. Crypto platforms like Coinbase are offering people an average annual yield of around 4.7% on USDC. And remember, USDC is a popular stablecoin that's pegged 1-to-1 with the US dollar, so it's designed for stability.
Now compare that to your traditional savings account, where the national average interest rate is, less than 1%? The gap is just enormous, and it's making people ask a really simple question. Why is my money earning so little just sitting in a bank?
And this quote from our source material just hits the nail on the head. This isn't some abstract financial theory. No, this is real, direct competition that strikes right at the very heart of the business model banks have depended on for generations. For them, this is an existential fight. You know what happens when the economic pressure gets this intense, right? The fight always spills over into politics. This battle isn't just about markets anymore. It's now a high-stakes legislative showdown in Washington, D.C. So the central question that Congress is debating is basically this. Should these high-yield stablecoin products be restricted to protect the old banking system, or should they be allowed to compete freely in the marketplace? The answer to that is going to have massive, massive implications for the future of finance. And let me tell you, the two sides could not be further apart. The banking industry, they want to ban or severely limit these high-yield products. They argue they undermine the whole traditional financial system. The crypto industry, on the other hand, is just fighting for fair competition. And this disagreement has led to an all-out lobbying war, with the American Bankers Association making this a top priority, and Coinbase actually withdrawing its support for a major crypto bill it called fatally flawed.
This timeline just shows how fast things escalated. Early in the year, the banking lobby basically declared war on stablecoin yields. A bill got introduced, but by the second quarter, Coinbase pulled its support, saying it would just kill innovation. And the result? A total stalemate. Crypto legislation is just stuck. So why is this fight so incredibly intense? Well, it all comes down to the sheer amount of money we're talking about. I mean, we're talking trillions of dollars at stake, which brings us to the absolutely massive scale of this whole conflict. This is the number that has the entire banking industry on high alert. Projections are showing that as much as $6 trillion in traditional deposits could shift out of banks and into digital assets if these high-yield products are really allowed to take off. That's a monumental, system-shaking amount of money.
And it's not just everyday investors either. Institutional demand is absolutely booming. Like, this chart shows that institutional USDC balances on Coinbase alone grew by nearly 40% in a single quarter. That tells you that the big money, they see these high-yield products as a serious alternative for their cash.
And the market itself is just exploding. The total stablecoin market is projected to become a $500 billion sector pretty soon. This isn't a niche product anymore. It's a major, major force in global finance. Okay, so let's bring this all home and talk about what it really means for the future of money. We've seen the players, we've seen the conflict and the stakes. Now let's talk about the real-world implications for you. You know, the most important thing to understand here is that this is not some temporary skirmish. This is a fundamental fight to define the rules, the structure, and who has control of the financial system for decades to come. The outcome of this battle is going to shape our financial lives for a generation.
So what are the key takeaways here? First, crypto platforms are not backing down. They're fighting for clear rules and a level playing field. Second, these high-yield products are fundamentally changing how we think about our money. Third, the fact that banks are reacting so defensively, that's a crystal clear sign that crypto has become a major economic force to be reckoned with. And finally, the rules for the future of finance are being written as we speak. And believe me, the outcome is far from certain. The battleground is clear. The stakes couldn't be higher. This competition is literally rewriting the financial playbook. And that leaves us with one really powerful question. Who is going to win the next era of money? Because the answer, well, it's going to shape all of our financial futures.